Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 50th COT report in 2014, and as usual we're going to start off with the changes in commercials positions. So here we go. S&P 500 is on top of our list with a 36% change in commercials positions. You can see the change sizes over here. It is of course a bearish change signal. We do see greater changes in the past, so it's not that surprising, although it is significantly larger than an average change size. So that is a bearish signal from the COT report. But let's look at the 5-year chart and see how extreme the market has become. You can see that we're getting closer and closer to bearish COT extreme levels, meaning that we may reach a level in the near future when we're going to be expecting a top to develop and see lower prices. Moving on to the live cattle market, where we have a 34% change in commercials positions. You can see the changes over here larger than average. In this case, we're talking about bullish COT change signal. And again, moving on to the 5-year chart, we can see the extreme. You can see we had a significant bearish extreme at the beginning of this year, and we've moved away from these levels, but not that much actually. So we're still talking about, generally speaking, more of a bearish picture than a bullish one. So we may see further decline in the live cattle market. Swiss franc, our next market, 28% change over there. Huge change size. If you look at the chart, no question about that. Very, very large change. Of course, this signal may have came a bit late. You can see this rapid decline in prices. Of course, we do know the fundamental background for that. But anyhow, this change is in the market. It's visible. And opening the 5-year chart, you can see that we are moving away rapidly from these bullish extreme levels that we were at not long ago. We may see more decline in prices after this huge change in traders' positions, of course. Moving on to large speculators, COT Extreme, we still have the Mexican Peso on top of our list with its all-time COT Extreme signal. We've talked about this in the past few reviews now, but I'll show you it again, how this extreme looks like. It's quite visible actually, and you can of course also see the previous COT extremes in the past, how effective these were when it came to analyzing the Mexican peso. So again, this is a bullish COT extreme signal, unquestionably large because it is of course all time. We've never seen such signals in the past. Lean Hogs would be our next market with a 76 report extreme in large speculators. This is not such a great extreme. In relative terms, this may be considered a bullish one, but if you look at the 5-year chart, you can see that we're far away from huge, close to all-time extreme levels. We're definitely not talking about any all-time extremes in case of Lean Hogs. So it's not such a strong signal. I wouldn't take a trade on that one. It may of course push you into a direction if you were considering a trade in Lean Hogs, but it's definitely not the signal that I'd be building my trading strategy on. Sugar, our next market, 73 report extreme over there in commercials. Excuse me. Well, actually, it is the extreme that we can see in commercials and large speculators also. An unquestionable bullish COT extreme. And as you can see in the past, these larger extremes managed to push prices higher. We still see a downtrend, and we are still expecting this to end eventually. But extreme-wise, if you look at the market, it is an unquestionable bullish extreme that we have in sugar market. That is going to be all for this short review. I hope you enjoyed this session, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.